Does limited use affect vintage car insurance rates? Have you ever wondered how the way you use your vintage car can impact your insurance rates? Limited use is a key factor that can make a big difference. When we talk about limited use, we mean that the vehicle is not driven every day. Instead, it is often saved for special occasions or leisurely weekend drives. This limited usage can lead to lower insurance premiums compared to regular vehicles. Insurance companies view cars that are driven less frequently as lower risk. Since these vintage cars are not on the road as much, they are less likely to be involved in accidents. This perception leads to reduced insurance costs. For many vintage car owners, this is a significant benefit. Many insurance providers have specific mileage restrictions for vintage cars. Often, they requiring that these vehicles be driven less than 5,000 miles each year to qualify for the best rates. This means that if you plan to take your vintage car to car shows or weekend drives, you can still enjoy lower premiums as long as you stay within that mileage limit. Another important aspect is the agreed value coverage. This means that the owner and the insurance company agree on the car's value at the start of the policy. If the car is totaled, the payout will match this agreed value. This can affect premiums based on the vehicle's market value and condition. Cars that are well maintained and retain their original parts are generally seen as more valuable and may qualify for better coverage options. Limiting the use of a vintage car can also lead to cost savings. Insurance companies expect these vehicles to be cared for and driven less frequently. This can translate into lower premiums for owners who take good care of their cars. Additionally, specialized insurance coverage is often available for limited-use vehicles. This type of coverage is tailored to meet the unique needs of vintage car owners. It can include protection for parts and restoration, which may not be included in standard auto insurance policies. In summary, vintage cars that are used less frequently are generally cheaper to insure. This lower risk profile makes them appealing to collectors and enthusiasts who want to protect their vehicles without incurring high insurance costs. If you own a vintage car and drive it only occasionally, you can enjoy the benefits of limited use when it comes to your insurance rates.